Uh, Please start, sir.
Okay, thank you. Good evening to all. Anyone have any question, any query from our previous session? Anyone? I believe there is no question since no one is here in chat box. So I believe nothing is, all are clear. Now, last night we discussed about how to calculate depreciation. We discussed depreciation in income tax law. We provide depreciation on the basis of block of assets. It is not on individual assets. We provide depreciation on block of assets. How to create block of assets? Depending on two factors, rate of depreciation and nature of assets. If nature of assets and rate of depreciation are the same for a particular asset, then that asset will fall into particular block, and we are supposed to calculate depreciation on the block value. We are not supposed to calculate depreciation on individual asset value. And we discussed about rate of different depreciation on different nature of assets, and sometimes it rate of depreciation vary on the basis of uses of the asset. For example, if you have a building, if that building is used for residential purpose, then rate of depreciation is 5%. If the same building is used for commercial purpose like office, godown, etc., then rate of depreciation would be 10%. Then we discussed about a format, very simple format. First of all, we are supposed to get return on value of the block at the beginning of the previous year. Then we should add any assets which fall under the block within this block which was acquired during the year. Whatever the cost of acquisition is there, we should add that value to get the value called ABC. From this ABC, we will reduce sale proceed of any assets which belongs to this block and sold during the year. Whatever be the sale proceed of that asset should be reduced, provided the sale proceed should not exceed the amount called ABC. Then remaining amount if is XYZ. If this XYZ is positive, then we should calculate depreciation. That was discussed in our last session. Now we are considering few more examples. Okay. Say I have two assets X and Y. It is furniture at the rate of 10% block. We have two furniture at the time at 1st April 2023. That means the opening block value is say rupees 1 lakh. During the year, I acquired an assets. The value of that assets acquired during the year is say furniture Z acquired on 1st July 2023. So my total is 1,50,000. Now I sold X. Now I sold furniture X for rupees, say 1 lakh. In that situation, yesterday we discussed after reducing this 1 lakh from the value of the block, on this 50,000, we will charge depreciation at the rate of 10%, which is 5,000. This depreciation is considered as a deduction for us. However, However, if say in any circumstances, say furniture X has been sold for rupees 2 lakh, then we should reduce entire 2 lakh. If we should reduce entire 2 lakh, do you think is there any value which we are supposed to amortize? We maximum to maximum we should reduce 1,50,000 ABC up to 1,50,000. We should reduce as a sale proceed. If suppose the furniture X has been sold for rupees 2 lakh, do you think we earn something or some value are still there in the block which we are required to amortize by way of depreciation? What is your take? What is your take? Anyone? Anyone? Can I say that? Can I say that altogether value of furniture X, Y, and Z was rupees 1,50,000. Out of this chunk of money, one of the furniture has been sold for rupees 2 lakh. Do you think we earned certain profit? Don't you think there is some profit element out there? or we still have some value to amortize as depreciation. Since the entire value, 1,50,000, we have the value of the particular block as on the given date, but one of the furniture was sold for rupees 2 lakh, which exceeds the value called ABC. Can I say that it is profit? Yes or no? We earned rupees 50,000, plus also we have furniture Y and Z with us. That means I have earned a profit of rupees 50,000, but value, we do not have any value to amortize in the number of years, so depreciation would not be charged. That means in case if the sale proceed, in case sale proceed exceed ABC, in case sale proceed exceed this ABC, the excess amount shall be treated as a short-term capital gain. And since entire value has been absorbed by the sale proceed, hence there are no costs pending which are required to be amortized over number of years. Hence, in this situation, depreciation shall not be charged. We are not entitled for depreciation. However, 50,000, that is the excess money received by us, shall be treated as a short-term capital gain. This 50,000 shall be taxable as capital gain. Is it clear? Is it clear? Is it clear? Now, another situation. I have opening block worth rupees 1 lakh, consists of X and Y furniture at the rate of 10%. During that, I did not acquire anything. So ABC is equivalent to 1 lakh. I sold both of the furniture X and Y for rupees, say 20,000. I got only 20,000 as sale proceed for X and Y. So there is 80,000. We have positive value. We have positive value, but we do not have any asset in the block. Do you think we have any asset in the block? Both of the X and Y were sold by us for rupees 20,000. So the block consists of rupees 80,000, but that block do not have any asset. So that since there was no asset, question of depreciation does not arise. In that situation, this positive value, since asset was not there, this block is ceased to exist. This 80,000 is termed as a short-term capital loss. This 80,000 is considered as a short-term capital loss and considered under the head capital gain. In short, we should charge depreciation. We should charge depreciation only if this XYZ value, this XYZ value is positive, as well as we have at least one asset in the block. That means block does not cease to exist. That means at least one asset in the block. The block should have at least one asset. At least one asset. If these two conditions are fulfilled, then only we would calculate depreciation. Otherwise, depreciation is not available. If if XYZ, if XYZ become negative, that denote we earned something, which means we earned short-term capital gain. If the XYZ is positive, but there is no asset in the block, it will be considered as a short-term capital loss. In this two situation, we shall not charge any depreciation on the block. We are not eligible for any depreciation for this block of asset. Is it clear? Anyone, any question? I think it is clear to all. Now, one rider is there. One rider is there which we are required to understand. Till now, we discussed that the date of acquisition or date of sale of the asset are irrelevant for the purpose of calculating depreciation under income tax law. Even though furniture Z was acquired by us on 1st July 2023, still we charge depreciation for entire year. Ideally, the date on which we acquire the or we sold the assets are irrelevant for the purpose of calculating depreciation under income tax law. We are charging depreciation on the value which are derived as on 31st March of the previous year. Hence, the sale date, the date of sale of the assets, or the date of acquisition of the asset are irrelevant for the purpose of calculating depreciation under income tax law. However, this rule have one exception. The exception is that if the assets acquired during the year was put to use for less than 180 days during the year, then on that value we should charge half depreciation. For example, opening return on value of this block consists of furniture X and Y is rupees 1 lakh. During the year, we acquire a furniture Z. Furniture Z is acquired on 1st December 2023 for rupees say 50,000. So we have 1,50,000. Now we did not sold any assets, so this is nil. The value which is equivalent to XYZ is 1,50,000. In this situation, we should charge depreciation in this way. Since this assets was acquired during the year but put to use for less than 180 days, that means from December to 31st March, we did not use these assets for 180 days. In this situation, on this value, we will charge depreciation half of the rate which is provided for this type of asset. That means on this 50,000 value, we will charge depreciation at the rate of 10%, but we will make it half. And for remaining value on the block, we shall charge depreciation at full rate. That is, our depreciation would be 10,000 on this, and on this, our depreciation would be 2,500. Altogether, I am eligible for depreciation on this block for rupees 12,500. Apart from this, the date of acquisition or the date of sale of assets are irrelevant for the purpose of calculating depreciation under income tax law. Is it clear? Is it clear? Anyone have any doubt? Is it clear how to calculate depreciation in income tax law? I believe it is clear to all. Okay. Now, computation of depreciation is not optional for you. If you are eligible to claim depreciation, income tax law suggests that it is mandatory to claim depreciation. It is not optional for you whether to claim depreciation or not to claim depreciation. It is not an option for you. You are required to calculate depreciation. If you are eligible, then this is not an optional scheme. You are supposed to calculate and claim it. Then I am giving you few example to you. Please try to calculate depreciation as per income tax law. The block is furniture. Okay. Opening WDV consists of furniture X and Y is rupees 5 lakh. During the year, furniture Z acquired, and that was acquired on say 1st July 2023 for rupees 1 lakh. Calculate depreciation. Please calculate depreciation in this case. Please calculate depreciation in this case. We have 1 minute time to calculate depreciation. Please reply quickly. Okay. The opening return on value, it is given at 5 lakh. Asset acquired during the year, which belongs to this block, which fall into this block, which should be classified under this block, is rupees 1 lakh. Total was 6 lakh. There is no sale proceed. Since this was acquired in the month of July 2023, can I say that during the previous year, the asset is acquired and put to use for more than 180 days? The period from 1st July 23 to 31st March, I believe it is more than 180 days. Hence, on this 6 lakh, we shall charge depreciation at the rate prescribed by the income tax. On furniture, the rate of depreciation would be 10%. Hence, on this, the depreciation amount would be 60,000. 6 lakh into 10%, which comes to 60,000. Clear? Done? One more example. What happened if this furniture was acquired by us on 1st January 2024? Now, please calculate depreciation. You have 1 minute time. In MCQ, suppose it is asked, what should be the amount of the depreciation? Please calculate. You have 1 minute time. Anyone? Priyaji? Kavita? Okay. I am solving it again for you. Since here the asset was acquired and the period, how many days it was put to use during the previous year, it does not exceed 180 days. It may be a maximum up to 90 days. Don't you think so? From 1st January 24 to 31st March, it is only for 90 days. For this year, we shall charge depreciation in two parts. On this value, we shall charge depreciation at full strength into 10%, which comes to 50,000. And plus on this value, we shall charge depreciation for 10% into half, which comes to rupees 5,000. So altogether, the amount of depreciation available for us is rupees 50,000 plus 5,000. Altogether, it is 55,000. Done? Any doubt, any question, any query? Now, one more question. Opening written down value of XYZ, 3 lakh. During the year Z acquired on say 1st July 2023 for rupees 50,000. Furniture X sold for on 1st December 2023 for rupees 1 lakh. Now calculate depreciation. Now calculate depreciation. In this situation, we shall add this value and reduce this. So we shall add this 3,50,000 and reduce this 2,50,000. Now, on this value, we shall calculate depreciation since the acquired assets was put to use for more than 180 days. Hence, on this value, we shall calculate depreciation at the rate of 10%, which comes to rupees 25,000. Our depreciation would be 25,000. How shall your answer differ if this asset is acquired instead of 1st July 2023? It was acquired on 1st December 2023. Please suggest what should be the amount of depreciation in this situation. Please write. You have 1 minute time. You have 1 minute time. Tejaswini, anyone? Okay. In this situation, since the acquired assets was not put to use for more than 180 days, hence on this value, we shall calculate depreciation at half rate, and on balance value, we shall calculate depreciation for full value. So 50,000 into 10% into half. So it would be 2,500 on balance on 2 lakh into 10% comes to 20,000. So altogether, the amount of depreciation in this situation would be 22,500. Is it clear? One more situation. If furniture X sold for rupees 3,25,000, now in this situation, now furniture X was sold for rupees 3,25,000. In this situation, be careful. We have value of rupees 25,000 in the block. The value which comes first goes out first. That means this 3 lakh was absorbed by this 3,25,000, and out of this 50,000, 25,000 has been absorbed. Hence, this 25,000 value belongs to the latest value. On this latest value, we are supposed to charge depreciation at half rate because that asset was put to use for less than 180 days. Hence, on this 25,000, depreciation would be 25,000 into 10% divided by half. Hence, it would be 25,000, 1250 would be my amount of depreciation. Last one. If furniture X was sold for rupees, say 4 lakh, in this situation, what happened? In this situation, what happened? In this situation, what happened? Since the furniture X was sold for rupees 4 lakh, since the sale value exceeds our value of the block, that means we have profit. We earned profit. This profit is known as short-term capital gain worth rupees 50,000, and we shall not calculate any depreciation. No depreciation shall be available to you. Done? Okay, one more thing. One more case. We have opening return on value of for furniture X and Y, rupees 3 lakh. During the year, furniture X was sold for X and Y, both were sold. X and Y both were sold for rupees 2 lakh. Now, please calculate depreciation. Please calculate depreciation. In this situation, we shall not provide any depreciation because the block ceased to exist. How could we say that it ceased to exist? After selling both X and Y, can I say that no addition was made by us during the previous year in this block? Hence, there is no asset in the block. The block does not exist. In this situation, the remaining amount, that is 1 lakh, would be considered as loss, and this loss would be considered as short-term capital loss covered under the head capital gain. Is it clear? Is it clear to all? Anyone have any question, any query? Please ask, please raise. Okay, Tejaswini ji, do you have any question, any query? You raise your hand. Okay, okay. Is it clear to all? Is it clear to all? Kavita, Priya? Now, we have considered several type of example for several type of different situation how to calculate depreciation. Now, sometime what happened? Suppose I I'm importing some machine from outside India. I bought a machine for rupees say 10,000 USD. For 10,000 USD, I have bought a machine and which was put to use by me on 1st April 2023. This machine is subject to tax, subject to depreciation at the rate of 15%. Can I say that on this particular date, the exchange, since we are supposed to calculate our depreciation in money, INR, but the value is in dollar. So we are required to convert this value in INR. So the addition, if there is no value, no block, no opening return on value of this type of assets, say it is nil. Now we should consider this addition. Since this is 10,000 USD, we are required to convert this in INR. We are required to calculate depreciation in Indian rupee. But our cost of acquisition purchase price is given in dollar. So we are required to convert it into INR. So as on the date when I booked these assets, the INR rate is this assets was bought by me on after taking a loan or we did not paid money for it. That means it is on credit. Either it is on the on loan for the for acquisition of this loan, this assets. I borrowed money in foreign, or this machine was acquired by me on credit. Say as on the receipt of this machine, the exchange rate was of 82. So I bought this machine as an addition for rupees 82,000. 8 lakh 20,000. So total value is 8 lakh 20,000. But say as on 31st March 2024, the value of the dollar is increased from 82 to rupees 84. There is a difference of rupees 2 was there. Now I am required to pay to my vendor instead of 8 lakh 20,000. I am required to pay 20,000 more to him. 20,000 more money are I am required to pay to my vendor. In this situation, this 20,000 is required to be added in the block value. So my block value comes to 8 lakh 40,000. On the other hand, if there is a reduction in the dollar value, say dollar comes down to 80 rupees. In that situation, I am gaining rupees 2 per dollar. So this 20,000 are required to be reduced from my value of the block on then the value whatever we got after adjusting the dollar component, we shall calculate our depreciation. It is not like it is we are supposed to adjust this type this exchange difference only in the first year. Whenever this exchange difference will occur in any subsequent year, we are required to adjust our block accordingly. If it is our liability is increased, then we are supposed to add the value in the block. And if our liability is supposed to be decreased, then we shall reduce our value in the block. Is it clear? And after adjusting this exchange difference, we shall calculate depreciation as we already discussed. Done? Clear? Clear? Now, few expenditure which are not available as deduction. That means these deduction, even though it is revenue in nature, but it is specifically disallowed. It is specifically disallowed as under the income tax law. Few of them we are supposed to understand. If certain expenditure like income tax shall be disallowed, you are not supposed to consider any direct tax, any direct tax as deduction for the purpose of calculating your income tax law, because direct tax is applicable once you earned your income. However, for the purpose of calculating income, we are supposed to consider the expenditure which we incurred for earning that income. Since the direct tax expenditure, even though it is an expenditure, direct tax is applicable once you receive, once the your income reached in your hand. That means after adjusting all expenditure, what we got, that on that we are required to pay tax. That means it is a PL appropriation item. It is not your profit and loss item. Hence, direct tax in India or in foreign country, if you are paying any tax which is in the nature of income tax, we are not required to, we shall not eligible to claim any deduction while computing our income under the head PGBP. Further, few expenditures are allowed only if they are paid. Only if they are paid. If you did not paid money for this type of expenditure, that means it is not available. If it is near accrued, but payment is not yet made. In that situation, these type of expenditures are not allowed. These type of expenditures are listed under section 43B of the income tax law, which provide that any tax, duty, sales, fee payable under any law, but this tax does not include income tax. This tax may include GST, may include professional tax or some other tax, but does not include income tax. Tax, duty, sales, fee payable under any law, employer's contribution to provident fund or ESIC, bonus, commission, leave salary to employ. Be careful. It is bonus, commission, or leave salary are considered on payment basis, but other component of salary like wages, like basic salary are not covered under this section 43B. Interest on any loan or borrowing from any financial institutions, bank, as etc. That means if you are paying any interest, if you borrowed any money from any bank, etc., and you are paying interest on them, but you instead of actual payment, that was only accrued, but you did not make any payment for that money. In that situation, the deduction in respect of interest on borrowed capital is not available to you unless and until you paid this money. There are a few more items which are governed by section 43B. How it was dealt, I'm giving you an example. For example, PF. We know that in PF, there are two types of contribution we are supposed to make. Number one is employee contribution. That means employee himself contribute money in the PF contribution. And another component is employer contribution. What happened? In general, suppose salary of Mr. X is rupees say 15,000. In that case, say your employer is deducting PF, say at the rate of 10%, say at the rate of 10%. So 1500 would be deducted from salary of Mr. X, and your employer will pay 13,500 in cash to Mr. X. This 1500, when it is deducted, it is considered as income. However, when this 1500 has been paid by the employer after making this deduction to the PF authorities, to the PF fund, if this belongs to month of April, if this belongs to month of April, ideally, if payment has been made within the due date prescribed for making this type of payment by the PF authority, by PF authority, it is prescribed that for which month it is related, it should be paid within next 15 days from the end of the month April. Say for the month of April, it should be paid within 15th May to the PF authority. If I made payment by 15th May, if I made payment on 25th May, if I made payment on December 2024, or it is not paid, If this is paid by the due date, that is 15th May, then I will get equivalent deduction. That means when I deducted money from my employee as contribution towards provident fund, this 1500 should be considered as my deemed income. And as soon as I made this money, I deposited this money to the PF authorities within the due date of making payment, then equivalent deduction would be available to me, and my income net is zero. The net effect of this type of transaction is zero. However, if I miss this due date, that is 15th May for the month of April, then if I miss this due date or did not pay this money, this reduction is not available to me. The net result is that my income would be increased by rupees 1500. That here positive has been made in my income, but reduction is not available. So plus 1500 minus 0, the net result is 1500 positive. That means my income shall be increased by rupees 1500, and so my tax liability would also be increased. Be careful while deducting any contribution towards any PF ESI from your employees. That means the concept of not now, then never would be applicable. You are required to pay this money to the respective authorities within the prescribed due date. If you fail to pay this money to the prescribed authority within given due date, then the deduction will never be allowed to you. Act now, otherwise you are not eligible for any reduction. This addition, can I say this addition is a chemical reaction? You do not have any reversal for it. Is it clear? This theory is applicable in case where we deducted money from employee. That means we can say that it is applicable in case of employee's contribution. In contrary, in case of PF, employer is also contributed similar amount of money to the PF authority. That means what happened? 1500 is deducted by employer from employee salary, and 1500, generally 1500 matching contribution is made by the employer. Altogether in PF, we will deposit rupees 3000 in the account of employee. We already discussed what shall be the tax treatment in respect of 1500 deducted from employee's part. 1500 deducted from employee's part. Now we are supposed to discuss what would be the tax treatment once we are required to pay from our own pocket. We as an employer are required to pay this money from our own pocket. How shall it be dealt while computing our tax liability? So now we are focusing on employer contribution. Employer contribution is governed by section 43B. That means it is available on payment basis. Somehow it is a modified cash basis. It is not exactly cash basis. What do you mean by cash basis? Anyone? Cash basis reduction is available on cash payment basis. What do you mean by payment basis? Anyone? Kavita? What do you mean by payment basis? Accrual or cash basis? Do you know? Do you heard about this word? Accrual basis as and cash basis of accounting. Anyone? Priya, do you know what is accrual basis of accounting? Okay. Cash basis is when amount is actually paid out. Okay. That means we should consider the particular expenditure in the year in which it was paid and the revenue. If we receive the money, then we shall consider our income. Otherwise, we will not consider that revenue or that expenditure. That is known as cash basis of accounting. On the other hand, accrual basis of accounting, we calculate our income or profit or loss depending on accrual. Even though it is not paid, but if it is related to this particular period, this particular financial year, then we shall debit that amount or credit that income in while computing our profit or loss. I think it is clear to all. Now, in case I am following accrual basis of accounting, certain items are available if I made paid, I paid that money during the financial year. Somehow it is modified cash basis is available. How it work? Let's look into this example. Suppose being an employer, I am required to contribute rupees 5,000. I am required to contribute rupees 5,000 to the PF account maintained for my employees. So this 5,000 belongs to the month of April 2023. I paid this money to the due date for making payment for this money to the income tax department is again next year, next month 15th. So I made payment of this money on 10th May 2023. I made payment on 15th May 2023. I made payment on 20th June 2023. I made payment of this money on 21st March 2024. I paid this money on 21st July 2024. I paid this money. I paid this money on 15th December 2024. I paid this money on 15th April 2025. I did not make any payment, not paid. In all situations, we are supposed to understand in which year we are eligible for deduction for this 5,000, the payment of rupees 5,000. If it is paid within the previous year, even though within the due date or after due date, that means if the money, this 5,000 has been paid by us within the previous year itself, even though it is after due date or within due date, we shall get the deduction in the same previous year. That means if we made the payment up to this date, that means payment has been made within the previous year, we shall eligible to get deduction on account of this payment made by us within within the previous year 2023-24. If it is within due date, that means cash basis we are supposed to follow. That means we are following cash basis. That means the year in which payment has been made, we are supposed to get deduction. However, only exception is that in first year in which this expenditure relate, this expenditure pertain, this expenditure is related to previous year 23-24. If I make the payment of this rupees 5,000 within the due date of filing my return of income, say the due date of filing my return of income, here the due date of filing return of income is relevant. On the contrary, in case of employee contribution, due date for making payment as per respect to PF Act, etc. are relevant. If I made payment of this rupees 5,000 to the PF authority within the due date of filing return of income, which is, say in our case, it is 31st July 2024. If it was made within the due date of filing return of income, hence that we should consider it was made in the previous year itself. Accordingly, if in this situation too, the deduction is available in previous year 2023-24. However, once the due date of filing return of income has over, after that, in the year, the deduction is available in the year in which payment is made. Payment is made by us. For example, in this case, since due date is over for filing return of income for previous year 23-24, now the deduction is available in the previous year in which payment was made. The payment was made in 15 December 24. That means previous year 24-25. Here, since it was made on 15th April 2025, that means the payment year 2025-26. Here, since it is not paid, the deduction is not available to us. Is it clear to all? Is it clear to all? Please copy this chart. This rule, that is section 43B, is applicable in case of taxes, duties, sales, etc., which should not be income tax. Employer's contribution to provident fund, ESIC, ESI, or bonus, commission, or leave encashment to employee, interest on any borrowed capital from bank or financial institution, or on all this type of expenditure, if we have debited our PL statement but payment has not been made within this given time frame, then that expenditure is not available as deduction, even though it is revenue in nature, even though we there is no special section for this type of expenditure. It should be considered as a deduction. We whatever we considered earlier, we discussed earlier, but this type of expenditure should be allowed as per this rule. Is it clear? Please copy this chart. Done. These mere these dates are mere example dates. It is not like we are required to made on this particular 21st March. It may be 22nd March or 20th March or 31st March. It may be any date. But the concept is that the payment is made within due date or within the due date of filing return of income of the that particular previous year. Then deduction is available in the previous year in which this expenditure pertain. Otherwise, the year in which we paid this money to the respective authority, the deduction would be available. Unless and until we paid this money to the respective authority, deduction is not available. Done? Any question till now? Anyone have any query from this? Now, in this section, that is section 43B, last year one major amendment has been made with respect to payment due to micro or small enterprises. Micro or small enterprises. If you are buying any goods or services from micro or small enterprise, in case micro or small enterprise, if you are buying goods, they are manufacturer, they are not trader. And in case you are buying services from micro or small enterprises, then the deduction is available only if you made the payment within 15 days. If the payment has been made within 15 days or the due date of the payment as per your return agreement, then only you are eligible for deduction. Otherwise, deduction would be available in the year when payment has been made by you to this micro and small enterprises. The due date of payment in general, if there is no return agreement between you and the micro or small enterprise, then it should be made within 15 days from the date of acquisition. Or if there is a written agreement, then the due date should the due date means the date as per agreement. But as per agreement, the payment term should not exceed 45 days. In any circumstances, if you are dealing with, if you are acquiring goods or taking services from micro or small enterprises, then the payment should be made. Ideally, it should be made within 15 days. However, if you are in a written agreement, you may in the agreement you provide any other number of days, but that number of days should not exceed 45 days. That means you may, as per agreement, you may agree that payment should be made within 30 days. Fine. Then in that situation, payment should be made within 30 days. If you agreed that payment should be made in 40 days, agree for within 40 days, you are required to make the payment to the micro or small enterprise. However, if agreement suggests that payment should be made within 90 days or 60 days, this type of agreement is not acceptable. The maximum number of days for credit is 45 days. If it is go beyond this number of days, then that is not acceptable. Further, if there is no written agreement when the payment should be made to our vendor, which are who are micro or small enterprises, within 15 days payment should be made to them. Else, the deduction in respect of those expenditure is not available in the previous year. The deduction is available in the previous year in which the payment has been made by us. For example, I bought certain goods from micro or small enterprises. Say X is a micro and small enterprises. I bought goods worth rupees 1 lakh from him. I bought goods worth rupees 1 lakh from him in the previous year, say as on 31st January 2024. As per terms of contract, we should make payment within 30 days. So ideally, within Fab, I'm required to make payment to them. But if the payment has been made by me, say on say on 15th March 2024, say on 15th April 2024. In this situation, what should be the tax treatment? In this situation, if payment has been made by me on 15th March 2024, since it is a delayed payment, but still the payment has been made within the previous year itself, the deduction is available to full extent. 1 lakh is available for me as a deduction. The cost of purchase would be available as deduction in the same previous year, that is previous year 23-24. However, in another situation, on 15th April 2024, I made the payment, but the payment is made beyond the time limit prescribed for this. Hence, this deduction is not available. So for this expenditure, deduction is not available in previous year 23-24. On this money in the previous year 23-24, I am required to pay tax to the government. However, the deduction is available in the previous year in which I paid this money. That is in the previous year 24-25, I am eligible for deduction. Sir, what will be the deduction is available? Ultimately, deduction is available to you. But so what is the purpose of this section? Be careful. Be careful. First, on the other, first benefit is the payment to micro and small enterprises would be smooth, and it creates some penalty type of thing on me. Suppose if this deduction is available to me in the previous year 23-24 itself, then I'm not required to pay any amount of tax to the government. But since I did not made this money to the micro or small enterprises, my deductions are deferred to the next year. In that situation, my income for previous year 23-24 would be increased, would be on higher side. I am required to pay higher amount of tax to the government, so that first of all, my slab may be increased. Number two, I am required to pay tax to the government, which will affect my cash flow, which will result my cash flow. That is one of the major concern for a businessman. Is it clear? Any question, any doubt till now? Anyone have any question, any query till now? Priya? Okay, there is no question from anyone. Now, one more important section from PGBP. What should be the mode of payment? What should be the mode of payment? Do you know we can make payment to our vendor in cash? Payment may be made in cash. We can made through banking channel. We can make payment through electronic mode like UPI, like NEFT, etc. We can make through debit card, credit card. Okay. Now, government want to avoid payment in cash. They have this one as a major hurdle. Because if someone are making payment in cash, there is no trail. There is no audit trail are there. Agree or disagree? If I'm making payment through banking channel, through electronic mode, or through UPI, through debit card or credit card, whatever be the mode, other than cash or bearer check, then there is a audit trail. There is an evidence of payment are there. Yes or no? However, on the other hand, if payment for a particular expenditure has been made in cash, then I believe there is no audit trail. that you may claim a false claim, you may claim false deductions. Sir, money has been paid by us, but the payment for this type of expenditure has been made in cash. So there is no audit trail. So there maybe chances are there it will generate black money. Agree or disagree? Which is not advantageous position, which will not create an advantageous position for our economy. Agree or disagree? What will happen? Suppose my income, generally what happened? I calculated this is my PL. My sale is say rupees 100 lakh. My purchase is say 80 lakh. Other expenditure I made through check, through banking channel, say 5 lakh. So my net profit is rupees 15 lakh. Okay. On this 15 lakh, I am required to pay tax to the government, which comes to around 1,50,000 plus 4% says if I am under new tax regime. But one fine, I am required to pay 1,50,000. Now, one of my professional friends suggests me, oh, why you are making payment to the government rupees 1,50,000? Instead of doing this, please make certain tax evasion. How could I make this tax evasion? Please reduce your profit. How could I reduce my profit? Please increase your expenditure. How could I increase my expenditure? When I did not make payment for those type of expenditure, on the suggestion made by him, what I done? What I done? I increased my expenditure, which the real one is 5 lakh, but I introduced some dummy expenditure, some false expenditure amounting to rupees say 7 lakh. So how could I made payment for this one? How could I prove that I made payment in cash? Do you think even though there was no payment has been made by us, I may create some documentary evidence and I will produce this as payment has been made, this expenditure has been incurred and payment has been made in cash. Don't you think it is the easiest way to generate black money and I will reduce my tax liability in this way? This is the biggest hurdle for us, for government. Government is understanding by this way you can avoid your tax, you can evade your tax, so that they make a provision. If 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 in any particular day, if you are making payment to any person for your expenditure exceeds 10,000, then the in cash, then deduction is not available for that type of expenditure. That means if I first of all, since payment has been made in cash, there is no audit trail. Suppose I bought some goods from Mr. X worth rupees 25,000. I inflected my purchase by showing this, and showing I also shows that also on the other hand, how could I make payment to Mr. X? I pass this type of entry: purchase account debit 25,000 to cash 25,000. Here, government is saying that if you are making a purchase from Mr. X or any other person, from a single person, and you are making a payment more than 10,000 in a day in cash, then this entire purchase we shall disallow. That means this would not be considered as your expenditure while computing your income for the purpose of PGBP hack. Hence, hence the rule is that in case if you are making payment for any allowable expenditure, don't pay in more than 10,000 in cash or bearer check in a single day. However, you make payments through banking channel, through account pay check, any amount. But if you are making payment through cash, then restrict that payment within 10,000 in a day to a particular person for a particular expenditure. Is it clear to you? Is it clear to you? However, only one exception is there. If you are making payment to road goods, goods carrier, that is road transporter, in that situation, instead of 10,000, the threshold limit is increased from 10,000 to rupees 35,000. In case you are making payment to road transporter, then this threshold limit of making payment in cash in a particular day, in a single day, is increased from 10,000 to 35,000. For other type of payment, the limit is rupees 10,000 in cash or account bearer check. When we are talking about cash, it includes bearer check. Okay. In case road transport operator, the limit for cash payment in a single day is rupees 35,000. And in case of other payment, the threshold limit for making payment in a single day to the vendor is rupees 10,000. Is it clear? Any question, any query till now? However, there are certain exceptions to this rule. However, there are certain exceptions to this rule. If you are making payment to RBI, State Bank, Cooperative Bank, or any primary agricultural credit society, or life insurance corporation, irrespective of any amount, you may make payment in cash. If you are making payment to the government and under the rules, you are required to make this payment in legal tender, that is in currency only. You are free to make payment to the government in cash, whatever with the amount. If you are making payment through letter of credit, that is LC, which is used in case of importation or of goods, mail or telegraphic transfer, which is known as TT transfer, book adjustment or bill of exchange made only payable to a bank. If you are making payment through this type of channel, then you are eligible to make payment beyond 10,000 or 35,000 through this channel. The deduction is available to you. Is it clear? Now, one more thing we are supposed to learn maintenance of books of accounts. We are required to maintain our books of accounts depending on method of accounting followed by us. In case of PGBP head, we are required to calculate our income. Which type of income we shall calculate? How should I calculate our income? For the purpose of PGBP, we are required to maintain our books of accounts. Books of accounts may be maintained on accrual basis or cash basis. Or somehow there is one more basis that is known as hybrid. Income tax does not suggest hybrid basis to be followed. So we will not discuss about hybrid. However, for the purpose of income tax, you may maintain your books of accounts on accrual basis or on cash basis of accounting. One question in my mind, do you think profit calculated by you as per accrual basis of accounting and the profit calculated by you by following cash basis of accounting with with same type or same number of transactions would be same or different? The profit would be same as per accrual basis or profit would be same as per cash basis? Can I say the profit computed by us by following cash basis of accounting or profit on calculated by us by following accrual basis of accounting would same or it would be different? What is your take? Anyone? Whether my profit in both of the accounting method would be same or it would be different? It would be different. So which method of accounting we are supposed to consider, whether it is accrual basis or cash basis? Our income tax suggests that you may calculate your profit by following either of the method of accounting, that is accrual basis or cash basis. However, the only condition is that you should follow that method of accounting regularly. It is not like that in 1 year you are supposed to follow accrual basis and in another year, in second year, you are following cash basis of accounting, and again in third year you are following accrual basis of accounting, and again in fourth year you are following cash basis of accounting. You are not supposed to follow in this way. you are supposed to follow either of the method of accounting, but should be consistency should be there. That means you should employ that method, deploy that method regularly. That does not mean you cannot change your method of accounting. You may change, but once you change, it is not so frequently you are required to be changed. There is some purpose, and if you change method of accounting, then change method of accounting should be followed regularly. Done. However, certain expenditure as discussed under section 43B are available to you as deduction on cash basis, even though you are following accrual basis of accounting, but certain deduction, certain expenditures are available to you as a deduction as per cash basis, which we already discussed under section 43B. That is employers' contribution to PF, ESI, bonus, commission, leave encashment to employees, interest on borrowed capital to the financial institution, bank, etc., which we already discussed. Those expenditure are available to you as deduction on the method of in general it is cash basis. Unless until you pay the money, the deduction is not available. Somehow in first year it is a modified cash basis we should consider as a deduction. Done. For remaining, it depends on method of accounting followed by you. If it is cash basis, then the deduction is available on cash basis. If you are following accrual basis, then your income is required to be calculated on accrual basis. Now comes to which books of accounts we are required to maintain. It depends on the person. Suppose you are a person on profit under the head PGBP. If you have profit under the head PGBP, then income tax suggests that there may be four category of the person. Rather than four, we can first of all we are making it two: professional person or business. Again, profession, it is divided into two parts: specified profession, non-specified profession. In case of business, again, it is divided into two parts depending on certain economic criteria. If you are a specified profession, if you are carrying on a specified profession, what do you mean by specified profession? Specified profession means profession like legal, medical, engineering. These professions are covered under this category. Legal, medical, engineering, profession of accountancy, technical consultancy, interior decoration, information technology, etc. These are considered as a specified profession. If you are carrying on a specified profession and your gross receipt in through this profession exceeds rupees 1,50,000 in all of the 3 years immediately preceding the previous year, then you are supposed to maintain those books of accounts which are prescribed under Rule 6F. If suppose you are carrying on a specified profession and for last 3 years, your gross receipt from this profession. For example, if I want to find out which books of accounts I am required to maintain from previous year 2023-24, I am a doctor. So in this situation, I'm required to check my gross receipt from this medical profession for last 3 years. Say in previous year 21, 22, 23, 2021, 22, 2020 and 21. That is the last three immediately preceding previous year. In this year, my gross receipt from my profession was rupees, say, 1,25,000. In this year, my gross receipt from my profession is 1 lakh. In this case, my gross receipt from my profession is only 50,000. Since in none of the year, my gross receipts from this profession exceeds rupees 1,50,000. I am not supposed to follow Rule 6F. I am not supposed to follow Rule 6F. However, on the contrary, if in this case, my gross receipt is 2 lakh. Here it is 1 lakh 75,000. And in year 2021, it was 1 lakh 60,000. Since in all of these 3 years, my gross receipt from the profession exceeds rupees 1 lakh 50,000. I'm supposed to follow Rule 6F. I'm supposed to maintain those books of accounts which are prescribed under Rule 6F. What is Rule 6F? We are discussing after some time. If suppose my gross receipt from my profession in 22-23 was 5 lakh, in 21-22 it was 2 lakh, and in earlier year it was only 1 lakh. In this situation, since gross receipts from my profession in last 3 years does not exceed rupees 1 lakh 50,000, hence I am not required to follow Rule 6F. 6F not applicable. That means Rule 6F in case of a specified profession is applicable only if gross receipt from this profession exceeds 1 lakh 50,000 in each of the last 3 preceding years. Then Rule 6, I'm supposed to maintain those books of accounts which are prescribed under Rule 6F. What are the Rule 6F? Suggest the Rule 6F prescribed these books of accounts. I'm supposed to maintain cash book, journal, if I'm maintaining mercantile system of accounting, are carbon copies of machine numbered bill exceeding rupees 25 issued by the person, and original bill of purchase which exceed rupees 50. I am required to maintain those number of documents, etc. Further, if I am engaged in the medical profession, then 2 more documents I am required to fulfill to maintain. I am required to maintain daily case register, which should be in that form number 3C, and inventory record of drugs or medicine, if and other consumable accessories used in the profession. I am supposed to maintain these books of accounts if I am a specified professional, and my gross receipt from the profession in each of the last 3 years exceeds rupees 1 lakh 50,000. Then I am supposed to maintain these books of accounts. Is it clear? In case I am specified profession, but I did not fulfill this criteria, in that situation, I am required to maintain those books of accounts which enable my assessing officer to compute my tax liability. That means the number of books of accounts, the name books of accounts are not enlisted. If I am category B, that means I did not satisfy the first criteria, that is rupees 1 lakh 50,000 in all of the 3 last preceding year. If I did not achieve that one, in that situation, I am required to maintain those books of account which enable my assessing officer to compute my tax liability. In our example, in case this case number B, I am supposed to maintain books of accounts which are prescribed under Rule 6F. In case of example A and C, I'm not supposed to follow I'm not supposed to maintain books of accounts which are prescribed under Rule 6F. I'm supposed to maintain those books of accounts so that which my assessing officer will compute my income properly. Okay, but it is what should be my books of accounts in case number B? It is not prescribed. Done. Now comes to business. If I am if I am carrying on non-specified profession, or I am carrying on any business, then if my profit from such business or profession, non-specified profession, exceeds rupees 1 lakh 20,000, however, in case of individual HUF, this limit should be considered as 2 lakh 50,000. If profit from my such business or profession exceed rupees 1 lakh 20,000, or the total sale or turnover from this business or non-specified profession exceeds rupees 10 lakh, in case of individual HUF, this limit is 25 lakh. In any of the 3 years, if my business profit in any of the last 3 years exceed rupees 1 lakh 20,000, or my turnover exceed rupees 10 lakh, However, if I am an individual or HF, then in last 3 years, in any of the last 3 years, my profit from such business or non-specified profession exceed rupees 2,50,000, or 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 my turnover exceeds rupees 25 lakh in any of the last three previous year, then I'm supposed to maintain so much books of accounts, those books of accounts which enable my assessing officer to compute my tax liability. However, in all of the 3 years, I did not fulfill those limit. I'm running a business or non-specified profession. In that situation, I'm not required to maintain any books of accounts. Is it clear? Is it clear to all? Priya, so being a specified profession, you are supposed to maintain which type of books or books of accounts you are supposed to maintain. If your gross receipts from the profession in all of the last three preceding year exceed rupees 1,50,000, then you are supposed to maintain those books of accounts which are prescribed under Rule 6F. Otherwise, you are supposed to maintain those books of accounts which enable your assessing officer to compute your tax liability. That means it did not give any name or this you are required to maintain, but you are supposed to maintain as per your decision, as per your judgment. You are supposed to maintain so much of books of accounts which enable your assessing officer to compute your tax, your income properly. However, in case if you are running a business or a non-specified profession, in that situation, the criteria for maintaining books of accounting are two. Number one, if your income profit from this business exceeds certain limit, that is 1,20,000, and or your turnover exceeds a certain limit, that is 10 lakh. In any of the 3 years, then you are supposed to maintain books of accounts. If in case individual or HF, this limit are increased from 1,20,000 to 2,50,000, and turnover increased from 10 lakh to 25 lakh. In any of the last three preceding previous year, you are supposed to maintain those books of accounts which enable your assessing officer to compute your compute your income. In contrary, if none of the year you exceed those limits, then you are not supposed to maintain any books of accounts. Is it clear? Ah, accounts on mercantile or cash basis, we already discussed. One more thing, income tax audit report. If your turnover, if you are running a business and your turnover exceeds rupees 1 crore, or you are not governed by some exceptional situation, in that situation, you are required to maintain books of accounts, as well as your books of accounts should audited by a chartered accountant. It is a compulsory audit. And in case you are running, if you are a professional person and your gross receipts from that profession exceed rupees 50 lakh during the year, and you are not covered by exceptional situation, then you are supposed to maintain books of accounts, as well as your books of accounts should be audited by a chartered accountant. Okay. However, the exception, one of the exception, there are a few more exception are there, but one of the exception we are going to discuss, if 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 your gross receipt as well as your gross payment was made 95% in no other than cash mode, then the limit of 1 crore should be increased up to rupees 10 crore. That means if your gross receipt from the business and up to 95% has been made in non-cash mode, that means through banking channel, or that is through electronic payment system, etc. You receive money, as well as the payment, whatever be the expenditure you have incurred, 95% of your expenditure has been incurred through your banking channel. Then, if these two criteria are fulfilled, then instead of 1 crore, the limit for tax audit is increased up to rupees 10 crore. Done. This is the one of the exception. However, few more exceptions are there, which we are not covering in this session. Done. Done. Is it clear to all? Yes, earlier it was 5 crore. Now it is revised. Couple of years back, it was revised to 10 crore. Earlier it was 5 crore, now it is 10 crore. Any question till now? The PGBP chapter which is covered in your syllabus is complete from my side. You there are a few more section in PGBP we are not covering since it is not covered in your syllabus. Okay. Any question? Else we will start capital gain. Anyone have any query, any doubt? Please raise. Uh, in exam, if we get question of such type, we have to answer the latest limit. Yes, yes, ma'am. You are required to answer following the latest provision of the law. Latest, that means assessment year 24-25. It is not like budget 2024 should be considered. It is budget 2023. Finance at 2023 should be considered. Okay. Now, our fourth head of income called capital gains. There, if you have some capital asset and you are transferring those assets, then whatever the gain you are generating shall be taxable under the head capital gain. Now, question arise, what do you mean by capital asset? What do you mean by capital asset? general, in general, whatever asset you have, all are considered as capital assets. There is a negative list is provided by the income tax law. Apart from that, all assets, whether tangible, intangible, movable, immovable, are considered as a capital assets. If you transfer those assets, transfer is a wider term than sale. If you transfer those assets and you earned capital, if you earn some profit, then that profit are considered under the head capital gain. That gain, it may be negative, that would be considered under the head capital gain. Now, what is the negative list? Which assets are not considered tantamount or considered as a capital asset? Number one, if the asset is stock in trade for you. If that particular asset is stock in trade for you, if you are selling that stock in trade, whatever be the profit you are generating, that would be taxable under the head PGBP. Hence, this stock in trade for you shall not be treated as capital asset. Be careful. It may happen that I am a jeweler. I am a jeweler. I am selling jewelry from my showroom. Whatever the profit I earned, since this is my stock in trade, whatever profit I am earning shall be taxable as PGBP under the head PGBP. However, on the contrary, Mr. X is not a jeweler. He required some money, so he sold jewelry belongs to him. He's selling his jewelry and earn profit. This profit would be taxable under the head capital gain. Be careful, since this is he is not a jeweler and jewelry is not considered as his stock in trade. Hence, the profit would be considered under the head capital gain. That means what should be stock in hand for one person may not be considered as a stock in trade for another person. Accordingly, you are required to decide whether I'm selling a stock in trade or whether I'm selling some other thing. If you are selling stock in trade in which you are engaged, the business in which you are engaged, if you are selling that product, that would be considered as your stock in trade. If you are selling stock in trade, profit earned by you shall be taxable under the head PGBP because stock in trade is not considered as a capital asset. Is it clear? However, on the contrary, the same product is there, but that Mr. X is selling, but that asset is not his stock in trade. The profit earned by him shall be considered under the head capital gain. Number two, personal effect. If you have any assets which are used for your personal effect, personal uses, then that if you are and you are selling that asset, you are transferring that asset is not treated as a capital asset. However, there are certain of exception to that rule. The rule is that in general, personal effect, if any product, any goods, any asset are used for your personal uses and you are transferring that one, you are not supposed to pay any capital gain tax. However, what should be considered as personal effect, again they are saying, again they are giving a negative list. They are saying that these assets are not considered as a personal effect, even though those assets are used by you for your personal uses. But these assets, apart from assets which are used by you for your personal consumption or personal uses, but these assets in any circumstances shall not be considered as your personal effect. That is number one, immovable property. Even though, even though I am residing in this house, this flat, that is, I'm using this flat for my personal purpose. Still, this house is not considered as a personal affected asset. This house, this flat would be considered as a capital asset. Done. Number two, jewelry. Number two, jewelry. Even though my wife is using that jewelry for his personal use, she is using jewelry, but that jewelry, since this is a jewelry, hence we should not consider that one as a personal asset. This jewelry shall be considered as a capital asset, even though my wife is using that jewelry for his personal wish. Still, this is considered as a capital asset. Archaeological collection, drawings, paintings, sculptures, etc. are also considered under this head. That means these assets, that is immobile property, jewelry, archaeological collection, sculptures, painting, work of art shall treated as capital assets. In any circumstances, we cannot say that these assets are my personal effect assets. Hence, on transfer of these assets, I'm not supposed to pay any capital gain tax. No, these type of assets shall be treated as capital assets in any circumstances. However, if jewelry, if I'm using jewelry as a stock in trade, that is another issue. In any circumstances, I cannot claim jewelry as a personal effect. However, I can claim this is my stock in trade. That is another issue. But that should not be considered as my personal effect. That means immobile property, jewelry, archaeological collection, sculpture, painting, drawings, work of art shall be considered as capital assets. We cannot claim those assets as a personal effect. Hence, on transfer of these type of assets, I am liable for capital gain tax. Done. Number third is agricultural land in rural area. If I am selling any rural agricultural land, then that would not be considered as a capital assets. Whatever profit I am earning is not supposed to pay, liable to pay any tax. If I have a rural agricultural land which is located in rural area of India, then and I am selling that land, whatever be the profit I am earning shall not be taxable under the head capital gain. Is it clear? And few bonds are there, like gold deposit bond, special bearer bond, etc. are there. If I'm transferring those bonds, I am not liable to pay capital gain tax. Is it clear? Apart from that, any assets, if I'm selling, that would be considered as a capital assets, and whatever the profit I am earning shall be chargeable to tax under the head capital gain. For example, Tejaswini is selling her clothes, whether it would be considered for capital, it would be considered as a capital asset or not. The answer is no, because clothes are not covered in the negative list. These are considered as a personal effect. Tejaswini is selling his motor car, which was used for his personal uses. Again, that this is not treated as capital asset. This is considered as a personal asset. Kavita is selling the notebook on which she created these notes. She write these notes. Again, this is not considered as a capital asset. These are personal asset. Okay. Hence, whatever with the gain whatever with the price you are getting, you are not supposed to pay any tax on it. However, if Priya is selling jewelry, even though she is using for her personal wearing, but that should not be considered. That should be considered as a capital asset. Any gain arise from that is supposed to be paid, considered under the head capital gain. Is it clear to all? Is it clear to all? What to mean by capital asset and what are not considered as a capital asset? I believe it is clear. Now, how to calculate how to calculate capital gain? One of the easiest calculation is in the income tax is to calculate capital gain. How could I say that one? One example I am explaining. Suppose suppose on 1st April 2023, I bought share of Reliance Industries Limited for rupees 2 lakh. Okay. As on 31st January 2024, I sold these shares for rupees 2,50,000. For selling this, I incur some brokerage expenditure, say rupees 1,000. How much gain I earned? Anyone guide me? As per your calculation, how much income I earned by this transaction? Can I say I earned rupees 49,000 from this transaction? Yes or no? I earned rupees 49,000 from this transaction. Yes or no? How could I calculate this 49,000? Anyone? How could I calculate this 49,000? Can I say? Can I say that my calculation would be like this? I'm not aware about income tax, but my calculation would be like this. I sold, that means sale price is 2,50,000. Less I incurred some expenditure on transferring these assets is rupees 1,000. So net I am getting 2,49,000. Agree or disagree? Less what was the cost for this shares? It was 2 lakh. In net, I earned rupees 49,000. This is my profit. This is my gain. Agree or disagree? Agree or disagree? Not closing value, sale value. Tejaswani, it was my sale value. I'm not supposed to pay capital gain tax unless and until that is transferred. If I have, suppose, some assets acquired by me in the year 2010 for rupees 5 lakh. Say I invested 5 lakh rupees into share market. In this today, the value of those share is 50 lakh. But I did not sold those assets. I am not liable to pay capital gain. When I transfer those assets, then only I'm liable to capital gain. Mere appreciation in the value in the assets are not subject matter to tax. That means the income should be real. You should not use the word closing value or opening value. It is sale value minus costs. Okay. Please note that one. Do you think one of the easiest calculation in income tax is this one? Don't you think? If you ask from a layman how much profit you earn this transaction, he or she will calculate rupees 49,000. Agree or disagree? Is there any rocket science in calculating rupees 49,000? Priya, Do you think there is some rocket science, Kavita? Or one of the easiest calculation in entire income tax law is computing capital gain. Agree or disagree? To some extent. You calculated perfectly. This is the calculation of capital gain. If your capital gain is short term. If your capital gain is short term. So what do you mean by short term or long term? Again, that means one of the easiest calculation in income tax law is computing capital gain in some cases. We know what do you mean by capital assets. We know what is the capital assets. Capital asset is divided into two parts. There are two type of capital assets we have. Number one, short-term capital asset, and another one is known as long-term capital asset. Number one is known as short-term capital asset. Another one is known as long-term capital assets. What is the meaning of short-term capital asset? Which asset is treated as a short-term and which asset is treated as a long-term? Depend on period of holding. So what do you mean by period of holding? The period of holding means the say jewelry, say jewelry. I purchased particular jewelry say on 1st 10 2019 and I'm selling this jewelry as on today. Say today is 30th October 2024. Just before this date, which was what was the date? I believe 29th 10 2024. Agree or disagree? If from 1st 10 2019 to 29 10 2024, this is known as period of holding. This is known as period of holding. That means asset hold by you before transferring this asset, before selling this asset, this period is known as period of holding. That means how many days you hold this asset. If the period of holding in general exceeds 36 months, that means this period of holding exceeds 36 months, then this jewelry is considered as a long-term capital asset. However, if the period of holding does not exceed 36 months, then this jewelry is considered as a short-term capital asset. Is it clear? Is it clear? One of the easiest calculation, easiest find how to find out whether my capital asset is a short term or long term. Just calculate the period of holding. How could I calculate my period of holding? The date on which I acquire these assets and the date on which I'm transferring. Immediately before the date on which I'm transferring. If this period exceeds 36 months, then the nature of capital asset is long-term capital assets. Otherwise, it would be considered as a short-term capital asset. Is it clear to you? Is it clear to all? Is it clear to you? What do you mean by period of holding? Period of holding means the date on which you acquire and the date immediately preceding the date on which you transfer this asset. This gap is known as period of holding. If the gap exceeds 36 months, then the asset which you are transferring, that capital asset, the nature of that capital shall be long-term capital asset. Otherwise, it would be considered as short-term capital asset. However, there are certain exceptions to this rule. In general, 36 months should be considered as a cutoff for long-term and short-term. However, in certain cases, the this cutoff is reduced to 12 months, or in some cases, it is 24 months should be considered. In case of equity share or preferential listed in India, listed in any stock exchange in India, Any securities, example, debentures, government securities, which are listed in India, other than market linked debenture and units of a specified mutual fund, unit of an equity oriented fund, whether quoted or not, zero coupon bond or units of UTI. In this financial assets, for determining whether my asset is long term or short term, we should consider period of holding 12 months as a benchmark. If the period of holding for these assets exceeds 12 months, that would be considered as my long term capital assets. Otherwise, it would be considered as short term capital asset. Is it clear? Is it clear? On the contrary, if I'm holder, if I'm transferring my capital asset is equity or preference share in unlisted company. That means in case of listed company, 12 months should be considered. In case of unlisted company, or the asset, the capital asset is immovable property, being land or building or both, the period of holding exceeds 24 months, then it will be considered as a long-term capital assets. Otherwise, it would be considered as a short-term capital assets. That means how to calculate, how to determine the nature of capital asset, whether it is a short-term or it is a long-term capital asset. The mechanism is that in general, we are supposed to calculate period of holding. First, in all cases, we are supposed to compute period of holding. If period of holding exceeds 36 months in general, or in some cases 12 months, or in some cases 24 months, then that asset, that capital asset is considered as a long-term capital assets. Otherwise, that capital asset is considered as a short-term capital asset. Is it clear to all? Is this is clear to all? Please remember the list of the assets, which the period of holding 12 months, we are supposed to consider this. For 24 months, we should consider this one. For 24 months, equity or preferential of unlisted company, immobile property being land or building or both. For 12-month criteria, equity or preferential which are listed, any securities which are listed other than market linked debentures or some units of a specified mutual fund, unit of an equity oriented fund, whether quoted or not, zero coupon bond, whether quoted or not, units of UTI, whether quoted or not. In these financial assets, the period of holding should be examined. If that period of holding exceeds 12 months, then the nature of that capital asset is long-term capital assets, else it would be considered as a short-term. Done. In general, if the asset, nature of asset is not covered in this 12 months list or 24 months, for example, I'm selling jewelry, which are not listed in here, then we should focus on 36 month. Then we should focus on 36 month. Goodwill, it is not governed here. We should consider 36 month as the cutoff period for determining whether my asset, whether my capital asset is a long-term capital asset or short-term capital asset. The purpose for discriminating between this, for dividing between short-term and capital, long-term capital asset is that the reason is that in general, if you are transferring short-term capital asset, whatever with the gain you are generating, in general, if you are transferring a short-term capital asset, whatever gain you are generating shall be considered as short-term capital gain. In general, if you are transferring a short-term capital asset, whatever income you are generating shall be termed as a short-term capital gain. On the other side, if you are transferring a long-term capital asset, it would be termed as a long-term capital gain. In general, this rule is applicable. However, there are certain exceptions to this, but we are not going into that one. Uh, in general, if you are transferring a short-term capital asset and you earned a profit, that would be considered as a short-term capital gain. On the contrary, if you are transferring a long-term capital asset, whatever gain you are generating, that would be termed as a long-term capital gain. Sir, is there any difference between these two? Yes, sir. The method, the mechanism of calculating gain is different. The rate of taxation is different on different type of capital gain. If it is a short-term capital gain, the mechanism to calculate gain is different, and the rate of gain, the rate of taxation on that gain is different. And on the other hand, if you are earning long-term capital gain, the rate and method of computation is different. Is it clear? Is it clear? Is it clear? Now, guide me whether my asset is a long term or short term. Identify whether my asset, capital asset, is a long term or short term. Jewelry. I'm selling all these capital asset on the selling date is fixed. Say on 23rd 10 2023. I'm transferring those assets on this particular date. Jewelry. I bought this jewelry on 1st April 2022. Is it long-term capital asset or short-term capital asset? Anyone? Please guide. The period of holding. We are required to calculate period of holding. Do you think the period exceeds 36 months? The period does not exceed 36 months. Hence, it should be termed as a short-term capital assets. Agree or disagree? Now, I have uh, immobile property located in Kolkata. Acquire this property on 1st April 2021. Is it long term or short term? Is it long term or short term? Is it long term or short term? How to determine whether 24 months, 12 months, or 36 months should be considered? Since it is an immobile property, a period of holding, if the period of holding exceeds 24 months, then it should be considered as a long-term capital asset. Here, the period of holding for this asset exceeds 24 months, hence this should be considered as long-term capital asset. Then I sold equity shares of Reliance Industries Limited, which was acquired by me on 1st April 2019. Now, I'm selling those shares of Reliance Industries Limited. Is it long term or short term? This is long term capital asset. I sold rural agricultural land purchased on 1st April 2020. Is it long term or short term? Is it long term? Rural agricultural land acquired on 1st April 2020. Is it long term or short term? Please answer. Okay. Some people are saying it is a long term. Why it is long term capital asset? Please explain the reason. Please provide the reason why it should be considered as a long term capital asset. One answer is that the period of holding exceeds 24 months. Hence, it should be considered as a long term capital asset. Priyaji is typing as the period is over 24 months. Dear student, don't jump into conclusions so quickly. Don't jump into conclusions so quickly. Rural agricultural land located in India is not considered as a capital asset. This is in the negative list. Since this is not a capital asset, hence, why should we discriminate whether it is a long term or short term? This is not a capital asset at all. For determining short term or long term, first of all, that asset should be a capital asset. Do you think it is a capital asset? This is not a capital asset. Hence, question of short term or long term does not arise. Agree or disagree? Don't jump into the conclusion so quickly. Okay, done. One more thing. One more thing. I am selling my motor car, which I use for personal purpose. which was acquired by me on 1/4/2021, whether it is a long term or short term. It is a long term or short term. Again, since it is a personal effect, it is not considered as a capital asset. So question of long term or short term does not arise. Agree? Now we know that what do you mean by capital assets? How to determine whether a capital asset is a long term or short term? Any doubt, any question till now? Calculation. How to compute my capital gain. First of all, we are going to discuss how to compute capital gain if the asset is a short-term capital asset. In case capital asset is a short-term capital asset, in the year of transfer, we are required to calculate our gain. How to calculate my gain? We all knows that thing. I have a jewelry acquired on 1st April 2022 for rupees 5 lakh. I sold this one on 1st July 2023 for rupees 6 lakh. I incurred brokerage expenses at the time of selling, say rupees 1,000. How should I calculate whether this is my long-term capital asset or short-term capital asset? Anyone? This is purchase date. 1st April 22 is the purchase date, and 1st July 23 is a selling date. Whether it is a long term or short term, I believe everyone agrees this is a short term capital asset. In that situation, how could I compute my capital gain? Sale consideration 6 lakh, less expenditure on transfer, that is 1,000. So it is 5,99,000 is my net consideration, less cost of acquisition, that is 5 lakh. My short-term capital gain is 99,000. This is the calculation we are required to be done. We all knows this calculation. One of the easiest calculation in the income tax. We know how to calculate, how to compute my short-term capital gain. Is it clear to all? Is it? It is difficult. It is tricky. It is very simple how to calculate short-term capital gain. Agree? Now, how to compute long-term capital gain. That part we will discuss in our next session. That would be held on 4th of the November. Till now, if you have any question, any query, we have couple of minutes to resolve those one. Great. Tejaswini, have no doubt. What about Priya? What about Kavita? So, Tejaswini ji, please guide me to revise the chapter capital gain. Which asset are known as capital asset? Please guide me. Anyone? Which assets are treated as capital assets? All assets are treated as capital assets, whether it is tangible, intangible, movable, or immovable. However, a list are given. These capital assets, these listed assets are not considered as a capital assets. Number one, which one? Number one, stock in trade. Number two, personal effect. However, we should not consider these assets as a personal effect. Immobile property, jewelry, archaeological collection, works of art, painting, drawings, sculptures, art, rural agricultural land. Next, few bonds like special bearer bond, gold deposit bond, etc. are not considered as capital asset. Apart from that, all assets, whether tangible, intangible, movable, immovable, are considered as a capital asset. Now we know that what is capital asset. We are supposed to determine whether this capital asset is a short term or long term. When we are supposed to determine, we are supposed to calculate period of holding only in the year in which we are transferring. If we are not selling, if we are not transferring that capital asset, we are not supposed to calculate capital gain. In the year when we are transferring these assets, we are supposed to classify whether my capital asset is a long term or short term. How to determine the whether my asset is a long term or short term? It depends on period of holding. How could I compute my period of holding? The date starting from the date of acquisition till the date immediately preceding the date of selling. If the period, this is known as period of holding. The difference between these two dates are considered as period of holding. If the period of holding exceeds 36 months in general, for few cases 12 months, and for few cases 24 months, then that capital asset is treated as long-term capital asset. Else, that capital asset would be considered as short-term capital assets. However, there are certain exceptions to this rule. We are not going into that. Is it clear? And how to calculate capital gain? Very simple format is there. Full value of consideration, which is known as sale consideration, less expenditure on transfer. We got net consideration. Out of that, we reduce cost of acquisition or cost of improvement. We get capital gain, short-term capital gain. How to calculate long-term capital gain? We will discuss in our next session, which will be held on 4th of the November. Oh, any question? If if you do not have any question, any query, I am um, we are concluding this session. But before doing so, please comment whether you learned something or something you like the methodology of teaching. Please comment in the chat box. Or if you have any question, any query, please raise. Still, we have a couple of minutes. So you have we don't you do not have any question and query. Shall I conclude the session? Wish you happy Deepavali, and on 4th we will meet again at 6 o'clock. Thank you.